You happen to see a video I put out last week, which was the real estate market update for May 2021. We touched on some of the fundamentals of the current market. I mean, the market's crazy without a doubt. Prices are going up very, very quickly, and it's leading to a lot of speculation that we're seeing another housing bubble. And in that video, I shared that I didn't believe it was a bubble based upon the fundamentals that exist in the marketplace today, mainly supply and demand. And we kind of went through that in detail. So if you didn't see that, go ahead and take a look in the links directly below, and I have that for you. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And this week, I wanted to kind of build upon that. I had a couple of great conversations with some past clients following that video that asked some questions about inflation and what else was going on in the economy as a whole, and whether or not the market that we were experiencing was isolated. And it brought up some good points. So I wanted to share some of those with you today. And one of the points in last week's video was I didn't look at the year over year price increases or sales volume increases or listing increases that I normally do. And the reason being is the numbers from a year ago are completely skewed. The same is true right now of some of our inflation numbers. So there's been a lot of talk the last week or so over inflation, and that the consumer price index is jumping, and we're seeing the highest level of inflation that we've seen in quite some time. And don't get me wrong, I know that things are more expensive. There are supply chain constraints across the economy, everything from pool chemicals to semiconductor chips for automobiles, trucking industry, clothing, food, you name it. It's not independent of any one industry. It's across the board. And so a lot of the year over year numbers that we're seeing right now are a result of that. CNBC stated this week, and it's kind of an interesting quote. They said one big reason for the acceleration in prices was base effects. So what do they mean by that? So what they're saying is at this time a year ago, the economy was hit with the worst of the COVID pandemic and inflation was unusually low. So you go back a year and the economy shut down. So demand for everything stopped. As a result, prices fell. And now we've got everything coming back out. All states are starting to open back up. So you've got this rapidly increasing demand, and it's causing the inflationary numbers to look higher than they actually are. And even the Fed issued a statement that they believe that what we are seeing right now is not a long-term trend, but is transitionatory. I believe that's the word they use, kind of a big word there. So, we're going to keep an eye on that. Second thing is to do with home prices. And it's not isolated what's going on right now. It's pretty crazy. In fact, the National Association of Realtors just issued their 2021 Q1 home price report. And what they actually found was that 99% of all of the metro areas tracked saw year over year price appreciation. So think about that. 99%. Not isolated, it's across the entire country. Even more, 89% of those metro areas saw double-digit price gains. That's a lot. I mean, normally you see bubbles pop, so to speak, in given areas where you see the market in one area get overheated. So again, it's a tough statement to make when homes are selling for 10, 20, 30, 40, 50, 60, 100, 110,000 over list price. There's multiple offers on everything. Talked to an agent this morning that had 40 offers on their listing. And it seems that it's just overheated frenzy. But even the big four financial institutions, being JP Morgan, Merrill Lynch, Goldman Sachs, and Morgan Stanley, have all just released statements stating that they don't think this is a housing bubble either. And I only bring this up to relay additional information to you because there's certain people that are in the process of selling, or they're going to sell, and they're thinking that their best option may be to rent for a year or two. And for your specific situation, maybe that's true. I mean, ultimately, you need to make the best decision that's right for you. So all I want to do is share the information as I receive it so that you can interpret that information as you think best and make that decision that's the right one for you and your family. But let me just share some of these ideas with you. So JP Morgan, housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are more likely to keep rising. If you are looking to purchase a new home, conditions now may be better than 12 months. Hence, those who remember the housing bubble of 2006, 2007 may be nervous watching US house pricing soar now. But the previous bubble was fueled by speculative buying, which we do not think is the case today. And again, I've said that over and over that I'm not seeing speculation like we saw back then. I'm seeing a lot of strong buyer demand on a very, very low supply. Merrill Lynch, they also said there are reasons to believe that this is likely to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history, millennials, is moving through the household formation and peak home buying stages of its life cycle. Bottom line is, millennials are reaching prime home buying age, and they are the largest generation. So, demand for housing is naturally going up at a time when supply of housing has been going down. Merrill Lynch went on to say coronavirus related preference changes have coronavirus related preference changes have also sharply boosted home buying demand. At the same time, supply is unusually tight, with available homes for sale at record low levels. Double digit price gains are rationing the supply. We move on to Goldman Sachs. They say strong demand for housing looks sustainable. Even before the pandemic, demographic tailwinds, those are the millennials again, and historically low mortgage rates have pushed demand to high levels. Consumer surveys indicate that household buying intentions are now the highest in 20 years. As a result, the model projects double digit price gains both this year and next. We go on to Morgan Stanley. Unlike 15 years ago, the euphoria in today's home prices come down to the simple logic of supply and demand. And we at Morgan Stanley conclude at this time the sector is on a sustainably sturdy foundation. This robust demand and highly challenged supply, along with tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. So, in essence, all the four big financial institutions are saying the same thing. And it's an opinion we've been saying here for some time on what we're actually seeing day to day in the market. It's competitive, it's hard. It's a tough decision to make. Should you keep plodding ahead if you're in the market to try and buy, knowing that home prices are going to continue to move up? If you're in the market and you're considering selling, should you? Or should you just wait since home prices are going up? I'll be honest with you, much of that depends on what it is that you're looking to buy. If you're moving up and you're looking to buy a larger, more expensive house, then making the move sooner rather than later is going to be in your best interest, because that more expensive house is only going to keep getting more expensive over the next couple of years. If you're on the opposite end of the spectrum and you're downsizing, you're going to sell and want to buy something smaller, possibly pay all cash. If you can hang on for a while, that would be the best thing to do. It's probably what I would do. I would go ahead and ride this market out a little bit more, but pay attention to what's going on a month over month basis. And lastly, analyst at Morgan Stanley, Vishwantha Tatur, mouthful, sorry about that. I butchered that name completely, but says, we have a strong conviction that we are not experiencing a bubble in U.S. housing. We are not at all suggesting that home price appreciation will maintain its current torrid pace. Same as what we said last week, it can't. But home prices will continually to rise, but they will start to do so more gradually. So you've got everyone here basically saying the exact same thing. If you want to be updated with the latest information and see, in order how it's going to impact the decision that you make, go ahead and subscribe to this channel, hit that little bell, the notifications. And anytime I put out a new video, which I always do at least once a week with the latest market information and stats, you'll be notified. And if at any time whatsoever you have questions or concerns about the current market or a situation you want to talk through, go ahead and reach out. I'm always happy to talk and share whatever insights I have to help you make the best decision for you.